It's not about picking stocks. It's about picking the right portfolio.
So we were going to start today talking about Google and the setup there. You said on the call that it's close to an important spot, I think potentially breaking trend. Obviously good, but not good enough in terms of earnings.
Yeah, the expectation for Google was that they'd show an acceleration, and they didn't.
Yep.
This company sells ads. As you're entering a recession, I say it to Friedman all the time, I would just plainly expect advertising revenue demand to slow. And it did, okay? Now, you can replace that with whatever some bozo wants to tell you about their AI initiatives, and just believe that. At the top end of the range, I don't believe anything. Again, and that's where it's coming from. So the risk range, first of all, the trend on, this is a real interesting setup, because trend for Google is 144. Okay, so let's do it the way we do it all the time. That's the beauty of a disciplined process, is that we don't have to overthink it. Back check, forecheck, paycheck. Who cares what the parents are saying, right? Stay with it, all right? That's this thing, trend, is 143, okay? The problem here, Jonesy, too, is that the risk range is 139 to 153. Risk range equals 139 to 153. So this number is inside of 143. So if it breaks, so it's already a rising probability that Google's going to break trend. Whereas Microsoft, it's not. Okay? So that's a meaningful call out. And what would be the catalyst for not to break trend? A reacceleration in advertising revenue growth. Because all they did on AI was increase CapEx growth, right? There's a cost to this stuff, Jonesy. Like, you don't just get to say, oh, I used AI, now I'm not as dumb as I used to be. I can figure things out. Great. It doesn't create capital goods demand for people. It creates CapEx for Google and all these companies that need to create it before the demand that they get. And that's really the open question in OpenAI and otherwise is, what is the open-ended demand? Like, we know what it is for us because we're a content company. But if you're like a lot of companies that aren't content companies, like, what do you really need to pay for when your P&L is in a recession? The Russell 2000, Jonesy, 304 of the almost 1,950 companies, there are not 2,000 companies in the Russell 2000, have reported negative 28% earnings growth. I mean, they're not going to run out and just buy everything you need them to buy from an AI perspective. No, because they don't have the same P&L that they used to have. So Anyway, that's what I think about Google. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.